The irony of the cryptocurrency space, an industry that was born out of wanting to break free from the vice of the central banking cartel, actually waiting with bated breath and being permissioned to run by the biggest central banker, Jerome Powell, is rather amusing. Ladies and gentlemen, the markets loved what JP had to say yesterday at Jackson Hole. Of course, what he signaled was an easing cycle to come, and that he thinks it's appropriate for monetary policy to adjust based on things like a weakening economy, inflation, and other such things. So we are, of course, going to be starting the video off there. I always think it's very ironic that Bitcoin was born to kind of challenge the central banking system. And now the Bitcoiners, the Bitcoin maxis certainly kind of choose the central bank as their overlord to pump their bags. It's kind of ironic, really. And I ultimately think that Bitcoin's implementation was actually to see a new financial era that runs upon distributed ledgers, that doesn't eradicate the financial system, but actually evolves it. Bitcoin is special in many regards. You know, it is, I think, the premier store of value cryptocurrency. However, as far as being a peer-to-peer currency, which was Satoshi's vision, that narrative and vision was hijacked, I believe, and Roger Ver writes some great stuff on that. Let us kick the video off with what Jerome Powell said, the specific sentences that saw the markets do well. And we have theorized that there is going to be cuts, and that cuts more broadly, it's not the 25 basis points that's really that much of a big deal. It's more what that signals, and it introduces some certainty to the markets at a time when the Fed has really introduced a lot of uncertainty. And markets don't like that. That's why you've got a lot of the volatility. Once they start to cut, you're going to see more coming, and the markets are going to kind of anchor around that and do well at a time when we're expecting them to technically and fundamentally. So when it walks, talks, and quacks like a duck, it's a duck. Let's dive into what Jerome Powell had to say yesterday to trigger the upside and pump our bags.
In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. Our policy rate is now 100 basis points closer to neutral than it was a year ago, and the stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. Monetary policy is not on a preset course. FOMC members will make these decisions based solely on their assessment of the data and its implications for the economic outlook and the balance of risks. We will never deviate from that approach.
You have it, ladies and gentlemen. Jerome Powell saying it's appropriate to make monetary policy changes given the data. The last FOMC minutes did kind of reveal that you had a bit of a kind of, not a mutiny, but a disagreement between Fed members. Two of them were actually voting for cuts, which is the first time you've had that kind of disalignment between Fed members on policy rates. They're usually rather in line. Of course, this has royally, according to the CME group, increased the probabilities of a rate cut. It's only 25 basis points is looking more likely now, and then going forward, they are starting to price in more continuation with the rate cutting cycle. The 30-day Fed funds futures really has been at round about 4.25 now for a while. It did shoot up going into this month and has kind of hovered right where now the CME has it, and things are more broadly in line. So we are going to get that rate cut. What I want to do, we played this clip for you earlier in the week, and it was Wells Fargo's Michael Schumacher essentially talking about what in September a 25 basis point rate cut would actually do for the markets. It would see them kind of be able to anchor, which is very much our opinion, kind of leap off of. So let's go ahead and play this.
If we get a 25 basis point, 0.25% rate cut, and then no talk of more rate cuts, does that matter to the market?
It does matter to the market, and here's why. Let's say that Powell comes out, not Friday, but SEP 17, Fed goes 25. He takes the podium at the press conference and says, well, look, we're not going to do this too many more times. Trust me. Nobody's that good a salesperson. The market's going to say, hey, guess what? Now we have an easing cycle. There are going to be more, 2, 3, 4 more rate cuts, whatever the number is. We in the market will price more of that. bonds will run, equities do well. I don't think Powell can really put that genie back in the bottle. The Fed may turn out to only do one cut, but that's not the initial market move. It's a big rally.
It's a big rally, and certainly technically we're expecting continuation in the new bull, as Mike Wilson puts it, for the S&P 500. Let's pull up the S&P 500. This was the move, to zoom in here, that you got on the back end of yesterday. This is a daily candle. Of course, you get a move like this in the S&P, you can imagine what crypto and the broader market's doing. Dollar down, Bitcoin dominance down. We're going to look at all of that. And we have said, not only technically are we quite confident on the continuation, at least we have technical merit for 6,590 on the S&P. We have also said that what Mike Wilson's saying is very correct in regards to his theory that this was the bear, and now you've got a bull. A bear market officially is around about, or the terminology for a bear market as it relates to the S&P or the stock market is a 20% plus pullback. You had that, 21% was this one, and once you retrace that, historically speaking, every time that's happened, you've gone on, we can go right the way back, but let's just go back to the 1980s sort of period. Every time you've engulfed a pullback of this magnitude, you've actually gone on and rallied for oftentimes up to 2 years. And that's what we're expecting for the broader markets. They are seeing that continuation. You've got a number of sort of macro reasons why you're going to see that continuation. When crypto comes into it, it's got all its own great technicals, all from a chart point of view, all its great fundamentals. And of course, there's an alignment there with the good economic conditions that we're now getting confirmation of and seeing that's going to really allow it to flourish. So Bitcoin, you all know the plan. On the smaller time frames, let's go over to, we did have these, certainly this bull flag. We did say this was likely going to be a bull flag. I don't think you invalidated this. And even on the smaller time frames, you did actually have a bit of a falling wedge here. And you can see how you broke out here textbookly. You're likely going to see continuation despite August, September being bad months. I know Ethereum, we were looking at a kind of broadening structure, and that very much played out. You can see this broadening structure. We drew this breakout retest and then see that big continuation. So we've got reason to expect continuation broadly to the upside for Bitcoin and the cryptocurrency market at large. On the smaller timeframes, you're just getting smaller patterns that are setting up, taking you in that direction. Of course, yesterday was a real triggering event for the markets. Like I say, you see the S&P do something like it did. Crypto really did pretty spectacularly. Bitcoin closed nearly 4% up yesterday. Ethereum was the real winner. And the interesting thing with Ethereum is we actually have the Patreons. I've spoke about sort of ETH strategy companies before, but we actually outperformed even Ethereum, which really led things, with a ETH strategy company, which was sort of nice to see. BTC DOM very much going in the direction that we'd expect it to. So technically we had all these kind of inklings that this was coming. Now we're getting the sort of narrative that accompanies it. And technicals will bring you early to the party. That can be a good and a bad thing. But this is what we're looking at for BTC DOM. This is likely a top for BTC dominance in the form of a head and shoulders. You've got a bull flag here taking you down to 57.3%. And then you've got 55% ahead of you. And this is going to be or tie us in with a more broad downtrend for BTC DOM, which we think we're now in, which is a flourishing environment for risk generally. We think you've got this great time ahead of you for the markets. And certainly if the traditional markets are anything to go by there, very much pointing in that direction. So when it walks, talks, and quacks like a duck, it is a duck. We did say you are going to just see now great things for Ethereum on the back end of, whether you like it technically or fundamentally as a product or not is irrelevant. On the back end of this break, you are now going to see Ethereum march towards that sort of 14K range. And this break was significant. Expect continuation. Ignore the day-to-day price action. Focus on the broader timeframes. I want to leave you guys on Tom Lee's thoughts in regards to what Ethereum is undergoing, being a kind of 1971 style moment where we obviously had the Nixon shock and they had to kind of create synthetic dollars. He says Ethereum's going for a similar moment, but you can apply this more broadly to the crypto space as a whole. If you look at, for example, how the Federal Reserve came around, it originally tried to get passed as the Aldrich Bill, which involved sort of the privatization of money. And they were concerned about that, so they kind of made it public with the Federal Reserve to kind of be a custodian over money. Now we're kind of doing pushing it back out to Wall Street. And I think there's some interesting sort of broader things that are happening in the world that aren't all just about pumping our bags, but more a fundamental change, kind of like another Bretton Woods taking place, albeit somewhat silently. So let's listen to what Tom Lee has to say. Obviously, he is CEO of Fundstrat, now the CEO of BitMining. Let's dive into this.
I think it's a lot like 1971 when the US dollar went off the gold standard. That created the innovation of Wall Street because they had to sort of essentially create this synthetic dollar. Wall Street moving on to the blockchain is a bigger moment, and I think that's why Ethereum is essentially having its 1971 moment equivalent.
Short clip, but 1971 changed a lot of things. People might not have been aware about it because they don't want the masses kind of knowing about things that are going on that will directly affect their lives, often be used against them. If you look at what going off the gold standard has done, there's been pros with it. I always say that and people get outraged. If you think about credit creation and things like this, it's not all bad. A lot of sort of the luxuries that we have today have come off the back end of it, but there has been a major debasement of currency, which is why it's so important to invest. We're seeing a similar kind of broad global monetary shift now with cryptos and what they're going to do and how they're going to fundamentally change things. And that's why whether you're into crypto or not, you should subscribe to this channel, because we're going to keep you up to date every single day on a technology that is going to fundamentally impact your lives. Ladies and gentlemen, that's it from me. I'm going to love and leave you. Have a smashing Saturday, and I'll see you all in Sunday.